everyone. Welcome to another edition of Get Social with Bond Finance. My name is Sarah Wilkins from Through the Door Property, and I'm here with Bruce Mainwaring, who is the director of Bond Finance. Hi, Bruce.
Hi Sarah, how are you today?
I'm good. How are you?
I'm very well indeed. Excited to be back on our little meetings.
I know, indeed, indeed. What are we going to be chatting about today?
Well, we're going to be looking at the subject of purchasing in segments. What I'm finding is that because in 2026, Bank of England is still quite high at 3.75% currently today. People are looking at more creative strategies so they can reduce the amount of cash they need to put into deals. So that's what we're going to be covering off today. So we're going to a little introduction about Bond. Then I'm going to be talking what creative strategies there are, but I'll be focusing on purchasing in segments in a case study we've just done. So a little bit about us. I started Bond back in 2004 with my business partner Dan Newbury, and we're FCA regulated and founder members of the NECFB. We've got a residential buy-to-let arm, and we've also got a commercial arm which does everything the resident buy-to-let team don't do. And we're based next door to Bank of England in 50 Gresham Street, and we're a medium-sized firm based there. And what is exciting is that we've also launched our own lending arm called BDK. Cool. And we actually lend out our own money, and we actually instruct VAS valuations. Now, this is a very useful tool for our clients because we can get valuations done for them prior to any applications going in. And these valuations are accepted by Shawbrook and HDB and other lenders. So it's a really useful tool when you're trying to work out a deal.
Brilliant.
Now, I touched on creative finance. We do run a course where we cover off utilising secondary security, purchase lease options or PLOs, exchange with delay completions, purchasing segments, which I'll be talking today about, company share purchases, and vendor finance. I think we've done a video, yes we have, on exchange and delay completions. So if people want to go back into the learning hub, you can actually see that video there. So, purchasing in segments. This is the case study we're looking at. So a client came to me looking to buy this building on the left. It's basically studios on the ground floor all the way up to the second floor, and at the top there's a buy-to-let, just a simple buy-to-let. The ones below are small little studios, sort of bedsit type scenario. And the purchase price was 1 million, but my client only had 150 to put in. So if you're on the traditional route, you're going to need to put in 25%, which is 250. He only had 150, so it was short of 100 and stamp. They know the area well, and they thought the property was actually valued about 1.25 to 1.3 mil. And they asked us for a solution. How can they utilise that undervalued purchase nature to allow them to buy this property? So BDK instructed a VAS valuation where we looked at different values. We asked the valuer to say, what is the value of the downstairs bit? What's the value of the upstairs bit? Just to break it up a bit. And this is the valuation. It came back. The downstairs lower ground, raised ground, first and second came back at 950, and the flat at the top came back at 300. So there was £250,000 identified. Now the question is, how do we utilise that value? So we went to Ultimate Finance for the top bit, for the bridge, and we went to HTB for the bottom bit. Now, Ultimate Finance, they will lend up to 100% of the purchase price or 75% of the open market value. And HTB, on a normal commercial term loan, will lend up to 90% of the purchase price or 75% of the open market value. Now the question is, how do we split up? How do we allocate the purchase price of each bit? So first of all, we started with Ultimate Finance. They were lending a gross loan of 250,000, and that net loan after 12 months worth of interest is 187,000. So we set the purchase price for the top flat at 187, so the client didn't have to put any money in. And then we would look to do a day one remortgage with someone like Quantum at 75% of that 300,000, which would release them an extra further £25,000. And we got the same VAS valuer back down, so we're minimising the variance in the valuation. So we've now set the purchase price on the top bit. We now need to set the purchase price on the bottom bit. So here's the terms from HTB. So we take the £1 million purchase price minus the 187, means the purchase price of the rest of the block is 813,000. HTB will then 75% of the 950, which is the value it came back, or 90% of the purchase price. So 75% of 950 is 712. 90% of the 813 is 731. So therefore, these terms from HTB show a net loan of 712. And guess what? We got the same VAS valuer back to value the bottom bit, which is already valued before, but basically retype it to HTB. So we have got we're setting the purchase price of 187 at the top, setting the purchase price of 183 at the bottom, and we've seen the terms from HTB at 712. So what cash is required? So no cash is required for the top one, but cash is required for the bottom section of 101,000, because we're receiving net loans of 187 and 712. So total loan required, so total debt coming to them is 899. So the cash required is 101. And then we've also submitted another application to Quantum for that day one remortgage to release an extra £25,000 out. So what cash did the client end up having to put in? Well, day one, he had to put in 101 to make the deal happen, and then he got the cash back again of 25,000. So his effective cash he's left in the deal is 76,000. So it's effectively just putting in a 7.6% deposit, which is awesome. You know, imagine getting mortgages at that sort of loan.
Exactly.
So the client was
fantastic.
Over the moon. Over the moon.
I'm sure.
Yeah. So that's
Great
us.
deal.
That's a case study done. And if people want to reach out, there's my contact details, and they can also on our website now get development quotes and bridging quotes if they want to cost up deals.
Yeah, could you have a quick chat about that? Because I know that's sort of a specialized section on your website.
Yeah, so when I find clients are analysing deals, the mystery of the finance part, how much they can lend, is the hard part for them. They generally know the purchase price is the purchase price, the bill cost is the bill cost, the NGDV they can work out.
Yeah.
But how much does the finance actually cost? Well, now they can just go directly to our website, put in all the details, and they can get quotes of how much the cost, and that allows them to put it into their spreadsheet.
Yeah, instant access, which is fantastic.
Yeah, they don't need to speak to me.
And also, I just wanted to sort of just circle back to the Learning Hub and mentioning that we had a video on exchanged and delayed completion. You've also been mentioning the Video Hub, which is on the website as well. If you go to the top, just click Learning Hub. People have actually been coming to you from watching the videos, or you refer people back to the videos just as sort of form of education, which is great.
Correct. Education is a big thing I like, because if my clients make less mistakes, they're going to be more successful, and they're going to be doing more business. So I'm using that as like a secondary learning tool, that Learning Hub. Yeah, it's working very well. It's working very well.
Good, good. Well, thank you. Thanks once again. Great case study, great deal. Yeah, if anyone wants to get in touch, Bruce's contact details are below. And thanks everyone for joining us. Please click and subscribe and look out for more videos. Bye, Bruce.
Bye, Sarah. Thank you so much.
Thank